Okay, we are locked and loaded. We should be live. What's going on, guys? If you guys can see me and hear me clearly, as always, drop something in the chat for me. Drop a 1, drop a 2, drop I'm blessed, drop I'm abundant, drop something in the chat to let me know you guys are alive and that you guys are ready to learn and trade on this Friday night, right? Or at least go over some trades on this Friday night. So let me know you guys can hear me. It says pretty sure we're good, but let me do this. Awesome. What's up, Abraham? Glad to have you on here, man. Shout out to you, bro. So as always, right, on these calls, first I want to say thank you guys for hopping on, right? It's a Friday night. Mostly everyone in the world right now is doing something to get farther behind, but you guys are here doing something to get farther ahead, right? So shout out to you guys for doing that. Let me see. I look orange. I feel like that helps a little bit. Alright, I guess there we go. But either way, where you guys are here to take advantage of your time in a more wise way, right? So I want to make sure I do my job and I deliver not only the best trading advice and the best trading knowledge and the best financial and economical knowledge that I can in my ability, right? But also I want to help you guys take the mental strides and take the personal development and take all of the other aspects of entrepreneurship and develop in those areas as well, right? I was just having this conversation with someone earlier today that trading, and it's a very corny and cliche quote, but it does not mean that it is not true, right? Trading is 90% mental and 10% strategy, right? I can go over my strategy again today, and I'll show you guys everything that I know about trading, but that doesn't mean you are patient enough, that doesn't mean you are disciplined enough, and that does not mean you are focused enough to sit down, lock in, and do it, right? So that is the big separating factor between people that, voice sounds like an echo. Okay, noted. How does this work? Does it sound better now? Or worse now? Turn this to the left. Does it sound better or worse? How do I sound? Good, bad. Let me make sure I have the right mic on as well. Something I gotta get better on is my whole setup here. Almost like another feedback from another device. Really? I wish I could hear myself. Hold on, let me see. Properties. Mic. Does it sound better now? Or no? It sounds the same. Same or better? Same or better? Yeah, I know, but the reason why I'm trying to fix this is because I tried clipping these for videos. If I sound like garbage, that kind of ruins it. Yeah, what the fuck? Okay, well, whatever. Nothing I can really do. Let me see. Give me one more second just to see, guys. Give me one more second just to see. Properties. Well, yeah, nothing I can do about it. Oh well. Okay, well, if you guys, if it sounds too inaudible, then let me know, and then maybe I can try and do something else. But if it's bearable, we'll soldier on through it, right? And I'll check it out whenever I'm done with this. I guess that's the best thing I can do for now. But yeah, anyways, what I was saying is the mental side of trading is much more important than the actual skill set of trading, right? I have some guys on here that are a little bit older students, and that's where a majority of people struggle. Once you learn how to trade, it's learning how to be patient and disciplined enough to make money later, not make money now, right? So, but for today, we're going to go over what the market has done this week, right? What we saw happen this week and what we can expect to happen moving into next week, right? We had a lot of news reports happen this past week, a lot of stuff with the tariffs. PC came out, that was a lot. And there was a bunch of other reports that came out this week as well. So there's a lot of volatility. Right. So if anything I'm going over today, doesn't make the most sense, or it's confusing, or you're not fully understanding it, just do me a favor and ask your question in the chat, and I will do everything I can to explain it until it makes sense. Right. So really, I took one other trade. I took one other trade this week. I didn't call it out though. I didn't send anything out this week just because it was a little bit slow. In my opinion, yes. Here in hindsight, it looks like we were moving in a good, downtrend in this channel. We're looking at the 15, and we're looking at Euro US. But I guess we can start off looking at DXY. We'll come back to DXY. We'll just do Euro US for now. Right, but yeah, so we're moving in this downward channel. Let me go to... So Sunday the market opened here. Sunday we open at... We'll put it right there. Right, so pretty much as soon as this channel was formed, we only ever had one bottom, or two bottoms and one top, pretty much, one full, top. So the channel had just started at the beginning of this week. The reason. Hold on. Did someone knock? I'll be right back, guys. I'll be right back. Someone's knocking at my door. Give me one second. Sorry for the disturbances. I'll be right back, though. Okay, sorry about that, guys. Someone's knocking at my door. But so yeah, it is two microphones playing back. You went mute, and you could still hear. I couldn't explain it to you, bro. I don't know how that could be happening. That's weird though. Yeah, because I don't have this another window open. Strange. Let me see. But yeah, no. So what I was saying though, I wish I could fix it, guys. I'm sorry that I'm not able to right now. I'll do some investigating afterwards after this call. But to just go back into, or maybe it's this. Maybe it's this. No, it's not. Yeah, but to go back into this, where we're at, where we were trading at the beginning of this week. So this channel had just started, and the reason why, that's what I was saying, the reason why I was a little bit hesitant to calling out setups is because, to be completely honest, everything that's been going on with the tariffs and with, I guess just price action, this past week has been a little bit tricky, to really identify. Because we were moving pretty bullish. We were moving very bullish. And I imagine that the tariffs and that interest rates not being cut yet, and a bunch of other factors, I imagine that would cause the value of the dollar to depreciate for at least this majority of this month. But it's kind of been the opposite effect. Right? As soon as there's volatility, or as soon as there's a little bit of concern or distress in the markets, instead kind of the opposite effect has been happening, where the dollar's been gaining a lot of value. Even though the news reports haven't been, this week was kind of good news for the dollar, I can't lie. But everything else here, I was expecting more so of support in a bullish reaction at this level at 8,500. And instead, last week we had just completely shut below it. So this week I didn't feel comfortable calling out sells because I figured that we were going to kind of make a reversal at some point and start trading back in between 8,500 and 9,000 for the whole number zones. But I was wrong,
right? And it wasn't happening like fast, right? So I still didn't feel comfortable sending out, or for example, sending out a sell signal
because I thought
it was going to go up,
and I didn't feel comfortable sending out a buy signal or buy setup or buy trade or whatever because of the fact that it kept pushing lower. You know what I mean? So it was kind of just a mentally conflicting for me personally when it came to finding a solid setup. None of the tools that I personally like to use, I didn't really find them working with each other too good, I guess for lack of better words. And because of that, I had a little bit of uncertainty in the market. And when in doubt, it's better to stay out. Right? It's better to not force the trade setup, and it's better to not prematurely take something just because you feel like you need to take a trade. Right? Especially me being in the teacher role, sometimes I feel bad when I'm not sending out trade setups. But that's the name of the game. Sometimes you're not really going to get the most confirmations, and you're not going to get. You're not always going to get a 5-point setup. You're not always going to get a 6, even a 3-point setup sometimes. So yes, I could have sent a trade out. But I just didn't feel comfortable sending something out. I got a small trade on Wednesday. Where was Wednesday? It was I think I caught in right here on the bottom is where I caught in at. When we broke down to 7,500. And since we hit 7,500, it's been somewhat of a decent. Let me scoot this over. It's been a decent area that's held support. So I feel like this upcoming week moving forward, it will be a lot easier to find a potential setup and a profitable trade setup for a couple of reasons. Right. Number one is I feel like this fake out that initially happened on this channel collected a lot of the money that was being held up here. Right. I'm sure I'm not the only person in the world that wanting this pair to go back up without expecting the pair to go back up. So that means that there was a lot of people buying in this area. Right. And even though people were buying, there was a lot of whatever you want to call it, manipulation, liquidity pushing, whatever you want to call it. But there's a lot of people selling still, right? And taking out those buy orders and making those buy orders hit their stop loss. So for lack of a better explanation, you know what I mean? I feel like this fake out is kind of what really considered people to close their trade because other people I'm sure saw this descending channel. I'm sure other people saw that we were making lower lows and lower highs in an even manner. You know what I mean? If they don't want to call it a channel, right? Whatever they want to call it, it's a pretty easily identifiable pattern to see when looking at a chart, right? So. And for most people that are trading retail and trading on these kind of charts, right? Most people probably saw this and were either selling here or they were buying here, right? More actively probably buying. Why? Because of how drastically we were falling, right? And whenever you have a drastic fall and you have a fast drop off, what usually happens, right? The market will usually rebound and go back and fill that liquidity gap. Okay. So I'm sure I'm not the person that thought that. So to go further into this, right? What happened though is I would say pretty confidently that this took out a lot of people that were buying. Let's just imagine if we had a buy position. Let's just say the average here, and we're targeting a high setup. Right. There's a 3-to-1 trade right there, and then look at where that ends up being. Right. Stops out these people that are buying orders. Probably stacking up orders here. What level is that? 1.8 thousand. Is the whole level zone that's at right now. If you guys look, right, 1.8. So that's a very strong buy zone. Where I'm sure there was a lot of liquidity of buying in right there. So people got stopped out. Now what happens now that people get stopped out? Right. In my opinion, I think that means that we hit a decent low for this pair. Overall, right? This is where I get a little confused. I'm going to take a little bit of a side tangent here. Just talk about the market in general and the economy in general, right? So everything that's happening with Trump and everything that's happening with the tariffs and with his new monetary policies that are going on right now. I'm not too sure about Doge, but
So with Elon or whatever.
But going on with Trump specifically, what's happening with
the dollar, right?
And what's happening with the U.S. economy.
Everything that he's doing is very strategical in the sense that I'm expecting everything. And this is how the game plan is traditionally supposed to work when it comes to tariffs and when it comes to these things that are happening,
right? Where
it devalues the dollar in the short term, where it makes people scared, it makes people skeptical in the dollar, it makes people skeptical in the government, it makes people a little fearful, so on and so forth, and it hurts in the initial period,
right? But the whole goal of everything is to strengthen the dollar in the long run,
right? Within the next 1 to 2 to 3 4 years,
right? So as of right now,
I do expect
that the pair Euro-US will continue to go up again,
right? But how far and how long?
That's what the question really boils down to,
right? Because once the tariffs start hitting
more so,
and people are talking about interest rates being cut again because inflation is still a little bit high,
and that the tariffs are going to cause inflation to go a little bit higher
because people are going to have to start eating the cost of increased
cost of production.
Pretty much of people having to do business here in the U.S.
We're gonna
be the ones that end up eating that cost,
right? Which means
inflation is going up, which means interest rates are going to get cut again,
which means the value of the dollar is going to go down. And so it's all a cycle that ties in with each other.
Right, so how far can Euro-US really go?
Right, so we're looking.
Let's hide this right now.
Right, so this is where we're currently trading at.
Okay.
When we're looking at the pair, where. And I talked about this a couple weeks ago. That this head and shoulders pattern.
I don't want to put my drawings on because then you'll see.
But I mentioned this like 2-3 weeks ago.
If you guys want to go look at that call.
But I mentioned that this area here, there's a lot of imbalance here, and there's a lot of liquidity in this area
because of how fast the price shot up.
Right. So how far it's going to go down the pair before it finds equilibrium, and then the pair Euro-US starts trending back up as normal. That's kind of what a lot of investors, myself included, are. You're not skepticizing about whatever the word is. I guess the word will be what word do I put? Not skepticism. Predicting, analyzing, whatever. But so this area here, I still do expect the price to reach this range. But again, this is on the daily time frame. Right. So imagine if we're looking at one candle each, right? And each candle represents a day. By the time it reaches down here, unless something drastic happens, like when Trump first announced the tariffs over here. Happen where it caused that big of an influx of money to come into the pair. It's probably going to be a couple of weeks before we reach all the way down. Maybe a couple days, couple weeks, more than likely a couple weeks. And then if and when we reach that point, more than likely we'll start trending up again. But now, how far and how long? That's the question. Because if we look back into 2021, right? Let's look a little bit. Let's look at the beginning of. Yeah, I guess 2021 is a high because this is way too far back. Right. So the peak of Euro-US where the dollar was I guess extremely weak. This was due to high inflation again because of COVID. Right. So just recently we kind of recovered. From COVID. Right. More 2022 area. Right. But now here. Yeah, that actually looks pretty normal too. But Either way, what I'm trying to say is that the amount of time that it took for the pair to drop from this high to this low was a year and a half. Right. So again, I am expecting the pair Euro-US to go up in general. But for how long and for how far, that's kind of where it's a little tricky to describe that. It's a little tricky to trade that. That's why again this week I've been a little concerned with just calling entries out and taking trades because I'm not too confident in where price is going to be going right now. Right. Overall, I do think that we will continue to work higher, but it depends on a couple of different factors. Right. Are we going to fill this price gap sooner than later? Or is let's say that this is an aggressive. I'm going to have to put my drawings on. But let's say that this is an aggressive fib. Right. Just try and focus on this here a little bit. Right. If this is the bottom, and this is where the top was. Right. That pink zone or the shallow zone here is exactly. So if you look at where my mouse is right here.
right?
Just keep it,
we hide it. That's exactly
where we're at right now.
More or less.
Give or take a couple pips.
Right. So maybe that because we're already at that zone. This next upcoming week. Right. The next upcoming 2 weeks. Maybe all of April. Right. Because this month is already done. Maybe all of April will be a bullish month for Euro US. Right. There's a lot of complicated factors that are going into the dollar right now. I thought that most of the volatility that was going to happen with the dollar was going to happen before the election, right? And I thought that once we figured out who the president was and what their goal on monetary policy was going to be, I figured that would be a little bit more smooth, right? So again, everything that I just said kind of ties into what I said in the beginning, where everything that Trump is doing with the monetary policy is made to weaken the dollar in the short run, right? It's made to so if the dollar is weaker, the pair Euro US is going to go up. Right, so for this upcoming week, I think that we're going to start seeing the effect of that. So long as what I just said about that fib level holds true. Let me see if I can go to this pair. It'll make it a little cleaner. This is better. I'll delete these for you guys. That way you don't have to see that much. Whatever. Okay. So what I was trying to say and explaining, and I was explaining it badly, is here. If this fib level does hold true for the pair Euro US and the implied volatility still holds because of the tariffs and because of the news. We have NFP coming up in a couple of weeks, right? Based on all those other factors. I do think that just based off the technical analysis alone and with the uncertainty in the market, right? That has to do with dollar. Everyone is there is like almost a billion. I think there's over $1 billion wiped out in stocks overnight from last night to today. So all of this liquidation, I think put a lot of short-term strength into the dollar, which will be here. This little area that you guys see here, right? All those bear candles. I think that is everyone panic selling, right? Like I mentioned, everybody panic selling their assets. Bitcoin still, XRP is down like 40% or 44% or something like that. Bitcoin is still down. Gold just hit all-time highs, right? Like 2 days ago, gold just hit an all-time high because of the uncertainty in the market, right? So people are going to the past 2 weeks. That downtrend that I showed you guys in the beginning of this session. I showed you guys that downward channel that started on last Sunday, and now the week ended with the channel breaking out. I think this past week, right, potentially was people panic selling, right? And now people take their money and they put all that money got put into cash, right? In the treasury bond, whatever it is, right? But it got put into US dollars. And now what's going to happen, I think, right, is now people are going to institutions are going to start swapping their dollars for other currencies, whether it's yen, whether it's franc, whether it's really, that's kind of it. You know what I mean? That's where people are mostly going to be putting their money. And that's going to cause, or continue to put their money into gold, perhaps. That's what's going to cause the dollar to lose the value that it just gained. And now this movement should ideally get completed. Right? How far is it going to go up? I couldn't really tell you. I don't really see this far take profit level being hit. We haven't traded that high in years since 2021. So is that going to get hit? Probably not. You know what I mean? Realistically. But could we hit this fib level? 100%. I think we could 100% take out these previous highs over here. I know my chart looks a little bit. I could delete these, I guess, to make it easier for you. Right. So I think for sure that off of this fib, I think we could reach this high potentially over the next couple weeks, and take out this previous double top that we saw over here, right? And if we look at the bigger time frame, and we get rid of all these drawings, and we kind of just look again at the pattern that's here, Right, it's a very solid triple bottom. It's a very solid triple bottom. Some people might call that. I wouldn't really say it's head and shoulders personally. But I would say it's a very solid triple bottom. Right, and this could be a break and retest of the 7,500 zone. Right, here will be the neckline. Right, one, two, three, break. Retest of this zone here. Again, which lines up with the fib, the same exact setup. Right, so overall, again, short term, I am expecting Euro US to continue going up, meaning that this upcoming week I am expecting the pair to have buying opportunities. So if we go now and we zoom in on shorter time frames, like I'm used to trading like the 15 minute, for example, and we look here. And we look at this channel that we're trading in. Right, we had a very solid break. Right, we had a very solid break out of that channel. And I also this is a trade that we I sent this one out earlier, not really officially, but I did send it out. Where we consider this fake out the low. Okay, the low. We will consider this the low. Let's go back to where we were actually instead of this talking. Let me show you. So this is let's say we were here. Okay. We're gonna do this with each other, so it's very easy to understand. We'll start up here. This is our high. This is our low. This is our high. This is our low. Okay. This high. And this low. Are let me say it this. This low. And this high. Are lower in price than this low and this high. Okay. The price is low. Right. Now same thing. We continue on. So we had low, high, low, high. Oops, I'm sorry. We had high, low, high, low, high, low. Or we could say low would be here. And then a lower high, and then a lower low. Okay. So this right here. This is our most recent high. This right here is our most recent high. Okay. This is our most recent low. Right. So in order for this to continue being a downtrend, we would need to have a lower high. Right. A high lower than this one. In order for this to be considered a downtrend. What actually ends up happening though is we break above that, and we get something known as a break of structure. Okay? This break of structure helps us as traders dictate buying or selling pressure. Okay? In this situation, it will be buying pressure. Why is it buying pressure? Because it broke to the upside of that. Okay? We had a break of structure to the upside. Right. So taking that break of structure into consideration, where did it end? Where did this move end? Right. That move ended right here. Right. So this would be considered the high of this move. Okay. Is this high higher than this high? Is this higher than that? The answer is yes. Okay. Because the answer is yes. We have two things now. We have a break of structure, and we have a new high. Right. Now something else that we can look for to make this a little bit more strategic and a little bit more clear and easy to follow. Right. Is we're gonna look at this section right here. Does this section if we were to compare it to a chart that we're all familiar with, did that section that I just showed you, did it look like this? or did it look like this? Right. Obviously, you guys can answer that in the chat if you want to. Right. It's a rhetorical question. But you answer that yourself. Right. Did it look like this? Or it looked like this? Right. It looked like the one on the right. It was more aggressive, for lack of better words. It was a little bit more impulsive. It was a little bit more fast. Right. It was a fast, impulsive, and aggressive move. Okay. So those three words always signal a very strong tool that you can use to help you trade. Okay, if you have
a break of structure,
you have a new high or a new low, and you have an impulsive slash aggressive slash fast move. Those are all perfect scenarios. Okay, for you to use your tool, Fibonacci. Okay, you're perfect way to use your fibs. Okay, so because we have a new low and a higher high, we can draw a perfect fib right here. Okay. Now if we get rid of this yellow box for right now, we'll put it back in a minute. Right. If you were to draw the fib here, we'll look exactly where the price went. Right. It went exactly to. This is a side topic. This isn't the trade that we sent up. I just want to show this because I'm talking about it. It hit exactly to our gold zone though. Right. Exactly to that gold zone. And now let's say that you were to enter on that trade. You enter on the break above the gold zone. You target a. You can either go take profit 1 if you really want to be a scalper. Take profit 2 is 30 pips. That's fair. Take profit 3 is usually where I like to call it me personally. But some people, if you were to hold it, take profit 4. As you can see right now, it would have got hit already. But let's say that we were just going to do take profit 3, and we're going to target the top of the channel. Right, the top of the channel, bottom of the channel, top of the channel. If you were to target the top of the channel, you put your stop loss where it's 3 to 1. 3 to 1 risk to reward. That's a beautiful trade. Right, beautiful, easy trade. Easy money, easy setup. Very simple. Because we were able to identify a couple of lows and a couple of highs and a break of structure. Right. Now, does this have directly anything to do with what I was just talking about when it comes to what I think Euro US is going to continue to do? Not necessarily. Right. But the reason why everything I was just saying before is kind of relevant still is because this kind of need to understand why the market is starting to break out of this channel. Right, you have to kind of understand why was this liquidity stop? Why this stop hunt was here? Right, and that is all because at a grand scheme of everything, the dollar is one of the most manipulated currency in the world. And the currency pair, Euro US, is the number one manipulated pair as well. Because it has the most liquidity, it has the most money inside of it. So it is still important to be aware of what's happening in the macro when it comes to trading, when it comes to the fundamental data, when it comes to what's happening, specifically right now as well, when it comes to the presidency that we're in. Because Trump's doing everything when it comes to these tariffs, and when it comes to interest rates, and what the Fed is doing when it comes to interest rates, and when it comes to battling inflation, all of those things are happening on a daily basis. Right? All these news reports are happening 2-4 times a week, and that is the thing that is moving this pair. Okay? Technical analysis, like I just showed you, helps you still take a good trade. Yes, but it's still important to be aware of why the market is moving in the way that it's moving. Okay. So that's why we're going over all this, right? But now let's say, Ollie, that's all perfect, man. But that's all in the past, right? Let's say that we were doing it like this, right? And the market looked like this. How would you know what to do, where to buy, or where to sell? What would you do right now, right? So there's a couple of scenarios. Okay. What I'm gonna show you guys is exactly what we just did. Okay. How we just talked about the break of structure, and we talked about the Sorry, I thought I heard someone knocking again. So you go a little crazy, you know what I mean? But what was I just saying? So the same way that we identified a break of structure and we identify a higher high. Okay, we're gonna do the exact same thing. But now we're gonna do it off of this entire move. Instead of just doing it off of this, we're gonna do it off of this. Okay. So very easy to identify. Where would you say the previous high is? I'd say like around here. Right. So did we break above that? Yes. So that's considered a break of structure. Okay, perfect. Right. So we have a break of structure. Do we have a new high? That's higher than the old swing high. Yes. So those are two quick checklists, two quick check marks. Right. To help us know that this could be a potential setup that we could use. Okay. Last thing. Did we have? Does this move look a little bit impulsive or aggressive? In comparison, we can go over the entire move. Does this move look a little bit more aggressive than this. Right? Wouldn't we say this here is a little bit sideways? You know what I mean? Up and down, swing low, swing highs, not that much. Right? Then we have this big drop off, but then here it's fucking ping pong. Up, down, up. Okay. Very easy to just look and tell. This is a lot more impulsive, a lot more aggressive, and also a lot faster. Okay. Now those three words help us identify. Okay, I can make my life a lot easier now. And instead of me having to try and figure out where price is gonna go, instead of me having to try to figure out what support and resistance levels, what supply and demand levels, what imbalances, whatever, which one to target, where is it gonna go? I'm gonna use a tool that's gonna make my life a whole lot easier. Okay. Now, what does this fib tell us? This fib is telling us, okay. And we're doing a bullish fib. Why? Because we had a bullish break of structure. We had a higher high. And we had an impulsive move to the upside. So all narratives for a bullish fib. Okay, not a bearish one. Okay. So taking this information into consideration, we have a couple options. Let's put this on a line chart. So that way it's easier for you guys to see. I don't think that made it easier. Personally. Okay, so we'll put it back to candles. All right. So. For those of you guys that don't know, I'm gonna say it super fast. Okay, I'm gonna say it super fast. Okay. That way it's just clean. Right. Let's say that we were trading like this. Okay, and this is what the market looks like right now. Our fib, we draw it high to low. In this scenario, you have three options on what will happen with your fib. Okay, you have three options. You don't have four. You don't have five options. You have six options. You don't have one option. You have two options. You have three options. On what's gonna happen? Okay. If you have all the how I just told you guys the three setups that you need to have a solid fib. Break a structure. New higher low. Impulsive. If you have those three check marks, one of these is going to happen. Okay. I will say this confidently. 9 out of 10 times. It is 9.5 times out of 10 times. This is gonna happen. Okay, one of these three options is gonna happen. Okay. So we have the candle. This is the market. Right. We're up. You're gonna come to retracement zone 1, which is the orange zone. Some of you guys have it as the pink zone if you have those old videos, which is fine. Whatever. Orange or pink, whatever. Retracement zone 1 is what we're gonna call it. And then we're gonna go up. Option number two. We're gonna hit the gold zone. Right. The gold zone is the most likely to happen. The gold zone is the one that is most likely to happen. It is the most powerful. It is the most predictable. And for multiple different reasons. The actual Cashflow course. If you watch the Fibonacci videos, I go over into what the fib zones actually represent. Basically, to sum it up, they represent a discounted price. They represent the most ideal discounted price. So the gold zone is the gold zone because it's the one that happens the most often, and it has the biggest reaction typically. So option one is you go to retracement zone 1. Option two is you go to retracement zone 2, which is your gold zone. Now, same thing. Whichever zone you hit, you're gonna go up. Now, option three of what's going to happen. Let's say that the price is moving very aggressively, and there's a lot of uncertainty in the market. There's a lot of buyers and sellers in the market. We're going to go past retracement zone 1. We're going to go past retracement zone 2. And we're going to come to what's known as retracement zone 3, which I just actually added the numbers the other day. But I would consider that the 78.6 and the 81.6. Right? That means basically where the pair is 78% or 81% discount. It's at a 81% discounted price. Okay. This doesn't happen as likely. Okay. As often. I should have said. This doesn't happen as often. it does happen. And it happens for those of you guys that like to trade gold or indices. Right? It happens a lot. When you're trading those. When you're trading commodities and indices have a lot of the time you have a strong reaction at the 78 or the 81 level. So option number 3 is you'll go down that low and then you'll go up. And option number 4 is if it goes lower than that, then the fib is considered invalid. And you don't use the fib. But those are the 3 options. Those are the 3 options. You have retracement zone 1, 2, or 3. Sum it up super fast, super easy. Any questions or comments or concerns about that? Rewatch the previous live streams or watch the video in the Cashflow course. And if you don't have access to the Cashflow course, buy the Cashflow course. If you can't afford to buy the Cashflow course, watch the free trainings that I've already put out explaining how to do this more in depth. Okay. But now to move on to the next part where we tie this all in. Okay. Is this where we're at? So this looks exactly damn near, right? This looks exactly what we just drew. Where the market was going a little sideways. You go down. You have your high. Now option one. We're gonna come down to retracement zone 1, and then go up. Okay. Option two. We're gonna go down to gold zone or retracement zone 2, and then go up. Option three is we go down to the 78 zone. Right? Now, if we look at where the 78 zone is, that lines up perfectly with our whole number zone. Which whole number zone are you talking about, Ollie? Right? This lines up with this half zone of 7,500. Okay, perfectly. At mind you. Okay. And now this whole number zone and this fib zone are actually very close to the bottom of the trend. Right. So it's an additional support. So we have 3 confirmations of that now, which is very solid. Right. That's the least likely to happen. Right. The 78 zone. So we can maybe not wait for that. Right. So let's look at the other options. Let's look at option number 1. If we would hit the orange zone. Right. Retracement zone 1. For those of you guys that know, you usually typically only hit retracement zone 1 if you have a very impulsive move, where it's very aggressive, very fast, and it's a fast move, where that like NFP for example. That's where you would more than likely retrace the retracement zone 1. It's not as likely. Okay. So if we're not really too sure which one it's going to go to, well, what do we do, Ollie? What do we do, Ollie? What do you do now? Is it a waste of time? No. You just pick the one that's most likely to happen. Okay. What did we say is most likely to happen? Right? The gold zone being taken. Okay. So we're predicting now. Okay, we'll wait for the market to come down to our gold zone. When and if it comes to our gold zone, we'll buy. Right? If it doesn't go to the gold zone and it retraces off of the orange zone, retracement zone 1, that's fine. We'll still write it on the way up. Right? But let's not buy too early and catch a falling knife. Okay? By catching a falling knife, I mean it's not always smart to just buy here because what if the market keeps going down? And now you're adding unnecessary margin, you're adding unnecessary stop loss, or potentially even worse, taking an unnecessary loss. Right? So the way that if you're not too sure about how to read the fibs yet, or you're not too sure is it going to go to retracement zone 1, 2, or 3. And as a beginner, you don't even really need to focus on identifying the gold zone. Right? So let's just do that. Let's not even look at our stochastic. Let's not look at our RSI. Let's not look at our smart money. Let's not look at our liquidity levels. We're just gonna use psychological zones and the fib. Okay. Now, if we look at this gold zone. Doesn't that also line up with fib structure? I mean, doesn't that also line up with our whole number zone? Right, it's a quarter level. Right, we have 7750, but it's still a whole number, nonetheless. So it's still reliable, and it gives us more confirmation, and it makes us more comfortable to take the trade. Right. So in this scenario, you have 2 options. You can either one wait. Right, option one. You can wait for the market to come down to the gold zone and buy. When it does, and you can target, again. Each level is a take profit. All technically, right? You can target this, take profit one. That's 11 pips. Take profit two. 23 pips. Take profit four is 44 pips. Technically though, this is supposed to be take profit one. But 44 pips is a lot. So you might not always get that. You know what I mean? So sometimes you might be happy. With 20 pips. So it depends on you. As a trader. But you use the fib levels for your take profit levels. Okay. So take profit. Well, this was 3. And now, if you want to go crazy, close some of the trade and leave runners. Take profit 4. Take profit 5. And like we said earlier, take profit 6. Is way up here. Okay. Are we gonna hit that? That's 200 pips. Maybe not today. Right? Maybe not today. Maybe in a couple weeks. Or maybe by mid next week. Right. So what I'm comfortable doing today is if it comes to this gold zone, I'll get in the middle. I'll target up here. I'll target up here. And if we hit there, I'll leave a runner. Right. So I'll leave the runner for there. And what we're gonna do is what's 3 to 1 for this. 3 to 1 here is my stop loss would be right here. Just below the gold zone is where my stop loss. How did you find your stop loss? Well, I found my take profit, and I made my stop loss 3 to 1. So I made my stop loss. I made my take profit 3 times bigger than my stop loss. So whatever your take profit is 48 pips. Because that's what the fib level is saying. Technically, the fib level will be saying here. Let's be accurate. 45 pips. Is a take profit. So my stop loss is going to be 15 pips. Very simple. Very easy to follow. Right? Let's keep it easy. KISS. Keep it super simple. Keep it simple, stupid. Right? So that'll be our first trade. If we hit take profit 3, we'll leave a runner and we'll let it hit. That's option one. If we can wait for this setup. You guys can make your life easy. Put a pending order and let the trade run. When it hits this price, it'll activate. And you win or you lose. Okay? Or you can do something that is a little bit more aggressive. But you could sell right now. Right? Why would you sell right now? Why would you sell? Everything you just said is saying that it's going to buy. You're saying that the pair is going to go up. Yes. Right. But I said pair's not going to go up right now. The fib works like this. It's the Fibonacci retracement. So I'm predicting that the pair is going to retrace down to here. Right, it's going to retrace to the gold zone. So let's say I was able to get a sniper entry up here at the top. You could sell. There's no harm, no foul. Just target the take profit as the gold zone. Right, target the take profit as your gold zone. And then again, same thing. Make it a 3 to 1 risk to reward ratio. So you could either wait for the buy setup, which is what I typically like to do. Don't get me wrong. Is what I typically prefer to do. But I will occasionally ride the retracement. You know, let's say for example, I'm not 100% confident in which retracement zone it's going to go to. I might potentially just buy here. I mean, sell here. Sell at this current price. Sell up here. And then ride the wave down. Right. I would just say personally though that you need a little bit more experience to do that, and that it's not as safe for lack of a better word. So if you want to be a safe trader, smart trader, you would wait for the price to hit here. You would wait for it to hit that gold zone there. And once it hits that gold zone, that's where you would start placing up your buy orders. Sorry, I just tried to see if this is the reason why my mic wasn't working good, but that didn't work. So never mind. Yeah. So as of right now, does oh well, I guess let me show you. Let me just show you guys what happens. So that's the setup. So I wouldn't do this. I wouldn't do this personally. I wouldn't sell. I'm just saying you guys could. Right. So we'll wait for this buy. So we'll wait for this buy. Let's wait for the buy. So you would be in this sell right now, and it's a little bit panicky, as you can tell. wait. We're not there yet. Okay, boom. Trade. Wait. No.
Wait. No.
Sorry, guys. Okay. But either way. So we came down. Your take profit for that sell would have gotten hit. But it would have been a stressful trade.
But it would have been a stressful trade.
You would have been going up and down a lot. That's not fun.
All fucking day.
You know what I mean? All fucking day.
But instead, if you waited for the gold zone,
we hit in the gold zone.
Now that we're in the gold zone,
the only thing you gotta do is wait.
Now you just wait for it to break out of the gold zone. When you break out of the gold zone is when you buy.
We would have bought right then and there.
And now look at that beautiful trade. And that's exactly what we sent out in the Discord. Let me try and pull the Discord up.
And a couple other students
actually bought
doing their own analysis.
Right?
So it's very simple once you guys learn the discipline of just
being patient.
Because
it was again. I'm trying to open the Discord to show you guys, but it's not loading.
But this was a beautiful setup.
Very easy. We identified our high and our low. We identified a new swing low. We identified a new swing high. We found an impulsive move. We drew our fib.
Came down to the gold zone.
We waited for it to break back out of the gold zone.
And it fucking hit.
You know, the trade hit.
If you wanted
to leave it running,
you could have gotten 70
pips potentially. Sorry.
Yeah, you could have gotten
70 pips potentially out of this move.
But then after that,
the market started coming back down. So I realistically,
I'm happy with my 45.
I didn't hold it for the full 70.
45 is still a lot of money.
45 is still a lot of money for the live trading around $8.
On average,
$7-8 a pip right now.
So today was a pretty good day.
Today was a pretty good day. I made over 4.
So
I can't complain.
And then as of right now,
let's see what the market's trading at currently.
Right here.
So
where we're
currently trading at
is around the same price.
Now this to me
looks like a
continuation pattern.
It could be a bullish flag.
It could be whatever you want to call it.
Triangle,
descending triangle. Whatever.
Right. But that looks like a bullish pattern to me.
To an extent. Looks like a bullish continuation.
Now, if we want to add on some other stuff, this doesn't look like it's going to continue going up.
This looks bearish.
We have a doji candle here too, though.
That's not good.
Doji candle could be bearish. And this is analyzing for next.
But before I get into next,
to analyze this trade that I just showed you guys,
this was a beautiful trade. Zero drawdown. Literally, it went directly to take profits.
Using nothing else but psychological levels and fib structure. For the viewers that are on here and that are watching and paying attention, did everything I just say made sense?
Do me a favor.
If you are watching this and it made sense,
drop a 7 in the chat for me.
And if it did not make sense to you,
say no.
Say no.
If it made sense,
drop a 7 or say yes.
If it didn't make sense, just do me a favor and say no.
Did what I say
make sense?
Enough sense for you to apply it yourself. I'll give you guys a second to
answer that.
For those of you that are watching. Again, because I already know it. If you guys don't understand it, I'd rather go back and explain it again. Rather than me just move on. So, did it make sense? Yay or nay? 777 in the chat if it made sense, or no Ollie, it doesn't make sense. If it didn't make sense.
I think I just fixed the mic. So I guess, well, hopefully it made sense. If it didn't make sense to you guys got to eat that yourself. I tried asking you if it made sense, but if you don't want to answer, that's on you. So moving on, I did fix the mic though. I on the streaming device I saw that the mic for the camera was on as well. So I apologize for that, guys. Hopefully I didn't make tonight's call too unbearable, right? But what was I going to say? Yeah, and then moving forward into this week, it's kind of just a matter of waiting and seeing what we can find, right? If we want to look closer here, we could say this. We could say this fib right here. And since this was an aggressive and fast move, right? This came up really fast. Retracement zone 1 is extremely possible, meaning that when the market opens next week, that we could continue significantly higher depending on a few other factors like we mentioned, like news. Really, that's it. News, and then anything else, that could happen. But as of right now, I still do feel bullish on the pair in general, right? Dollar is trading at 104, 104, which is a heavy zone. So it could hold here, right? We dropped off a lot. So the only other thing we got to wait on and see is if this liquidity dump right here is going to get taken back. If that liquidity is going to get filled. If it does decide to get filled, then the pair Euro-US is going to go down. If it continues to dump off, though, if DXY continues to dump off, then we definitely could see Euro-US go significantly higher this upcoming week. And then if that's the case, I'll be looking for more buy opportunities, and that's the first thing I'll be sending you guys Sunday afternoon and Monday morning. Right now, I think this is the solid setup right here. Again, this doesn't look the best. Fibs don't look, the fib looks good. RSI and Stochastic don't look the best. We're trading above the 200 EMA, which is good. We're above the demand zone. There's no immediate supply zone, which is good. We have a weak high on the 15-minute, which is good. So overall, I think that this pair will go up. And I would say, let's say we were to enter on Monday or Sunday afternoon, I feel like it'd probably come down. I'll look for an entry around here. And I'll target take profit 1, take profit 2, potentially take profit 3. That's really pushing it though. And then I would again make this a 3-to-1 risk to reward. If I'm gonna target here, then that's not that many pips. It's 20 pip stop loss. But honestly, probably what I'd rather do is I'll probably go 60. This will probably be my setup. I'll probably go there. I'll probably wait for it to pull back into that gold, into the retracement zone, and I'll target halfway up. So I'll leave this here for now. And I'm probably going to do my live stream. I'm not too sure if I'm going to do Tuesday, Thursday. I'm probably going to do Thursday. So maybe I'll do Tuesday, though. I'm not too sure yet. I'm trying to get my views up. So since, I got like 2 views right now. But I'm trying to get my viewers up. So we got to go a little crazy on that. So maybe I'll go back on Tuesday and I'll give you guys the update with this trade. So yeah, that's all I got for you guys for tonight. I hope you guys learned something. And if you guys do have questions about the trade setup or about my strategy or about my system or whatever, and you are a Cashflow student, please feel free to schedule a coaching call with me. And if you're not a Cashflow student, please feel free to schedule a free consultation with me. And I can go over everything that you guys might need help with, answer any questions, and most importantly, make sure that you're confident and excited about trading this up and coming week. Use the weekend to your advantage, right? Take Saturday and Sunday to refresh your mind, back test, look over the market, and correct the mistakes that you guys might be making. Prioritizing your studying and as well as prioritize showing up, right? This upcoming week, the only way you won't make money trading is if you don't trade, right? You won't lose every single trade that you take, so don't be scared of that. Just be scared of not trading, okay? So with that, guys, I hope you all learned something tonight. I appreciate you all hopping on for staying on here. And if you need any help, you guys know where to reach me. And with that, I will see you all at the top because the bottom is way too crowded. If you guys got some value tonight, do me the biggest favor. Shout me out on social media. Show me some love, right? And, that goes a very long way. My Instagram is @OllieCashflow. And I'm working on growing my Instagram and my YouTube, so any shout-outs go a very, very long way. And they are deeply, deeply, deeply appreciated, right? So with that, guys, I'm going to go ahead, log off here for the night. And if you guys need anything, you guys know where to find me, right? But with that, God bless, stay abundant. I appreciate you all hopping on, and I will see you all at the top because the bottom is way too crowded, ladies and gentlemen. Peace. Have a great night, guys.